Hello everyone, welcome back to the TraderLion channel. This is Richard and Ross, and today we're continuing on with our America's Greatest Opportunities series, covering a stock I'm sure none of you guys have ever heard about, Apple, of course. And just to set the scene, during this time, they had been releasing the iPod for a few years. They just released the iPod Classic with extended memory and battery life and all of those great things. And of course, they also released iTunes a year prior, and the fundamentals, as we'll get into, just are reflecting those increased revenue sources, and the earnings really started to follow extremely well. So, Ross, if you could scroll down just a little bit so we can see what the fundamentals looked like right at the bottom at that first buy point. You can see right here, we've got triple-digit earnings growth basically every quarter during this run. Extremely impressive there. And at the time of the first Apple buy on this chart right here, these are the fundamentals that were standing out here. The stock was a turnaround. The last 2 quarters EPS growth was 300%, 433%. Quarterly sales was accelerating dramatically every quarter. And we've got a lot of demand coming to the stock. Up-down volume ratio was 1.4. The R&D was 7.6% of sales. There was no debt, so this was an extremely well-run company. And we've also got fantastic earnings estimates for the next year, plus 130%. Extremely strong fund sponsorship with 3 top Fidelity funds taking up new positions of over 2 million shares each. And we had a nice earnings surprise the previous quarter. So in terms of fundamentals, obviously it had new and innovative products, the N and CANSLIM, fantastic quarterly sales, as well as quarterly earnings, as we see right here. And all really what was left is to find a proper buy point where you can manage risk, and basically the risk reward is worth it after the bear market. So with that, Ross, I'll hand it over to you, and we'll talk through this weekly chart at first and then move on later on in the video and take a look at some specific sections in MarketSmith on a daily. So yeah, take it away.
Perfect, Richard. Thank you very much. And Apple's technicals were as classic and perfect, I guess, as you could say, as the fundamentals, from their product to the immense growth. The technicals are fairly textbook as well. I mean, starting from the very beginning, you've got your solid prior uptrend riding its 10-week line, little shake below. We ultimately build a 19-week cup and handle base where we've got some nice tight action along the bottom of the cup. Volume, as you can see, accompanying that is below average. Volume finally picks up as we break up and start to create the right side of that cup here. That's where you get that first big increase in volume. And then you'll see we don't quite go to new highs, and that's where we pull back and form the handle again. Nice tight action, and then a clean, again, volume picks up, you get a super clean breakout right through the high of the handle. You can see here this where we have this line drawn. You can cheat your way in there a little bit early, especially when the volume's enormous. It goes on to ride its 10-week lineup. You'll see here we've got some nice tight action. We try to make new highs, but ultimately doesn't go. However, Apple being that institutional quality name, it's not surprising that we ultimately catch support right around its 10-week line. We do get 1 week here where we close below. Fortunately, that's on less volume than the push above, and we immediately recover, tighten up, and go on to make further new highs. So this add-on point, or where we might add shares, especially coming out of a brand new base, ultimately fails and shakes below its 10-week line. However, we do get support at its prior high. We immediately recover back above that line, tighten up, and you'll notice we are building a brand new base here. Remember, first week down is at the beginning of that base. This is the 7th week. You need at least 7 weeks, so that would make this a cup base or a cup breakout. Again, we break out and pull back to the top of this base, and what's going on here, it's a little bit sloppy, but notice Apple's on a solid uptrend, and we don't have the line here, but we're going to take a look at MarketSmith in just a little bit. And the general market is really struggling at this point. During this base building process, it kind of puts in a top and then starts rolling over and moving sideways all through this period. And
So
you'll see we really,
Apple's really trying to fight the market and showing a lot of power. So definitely with hitting new RS highs every day, this would be on your radar for this type of move coming out of this space, you would say.
absolutely, absolutely. I mean, and that's my point. So when you have a stock showing this kind of strength during the down general market, you don't even without the relative strength line, that's what that relative strength line is screaming at and telling you. So when this sort of thing is going on, that's when the relative strength line on Apple's typically going to let you know way ahead of time to have your alert set and be ready for when the pressure comes off the market. That's our favorite Ropel basketball underwater situation right there.
Right.
So, it's showing you how strong it is. Pressure finally lifts off the market and Apple just explodes. I mean, you can see here, I don't know how many weeks straight up this is, but that's quite a move. Volume's enormous, never touches its 10-week line. And notice when it finally does take a breather, look how tight that is. I'm sure is it a high tight flag? Depending on where you want to start it. Right. So let's say we start down here was roughly $15 and we're roughly, I mean, that's almost 100% move. The official high tight flag. Remember, A, they're very rare, and B, they're not. It's good to see it. Remember, we interpret. It's not predictive. That's why we wait for the actual breakout and see how it acts. You don't want to get too far in front of something like that. And I've learned from Ray, especially after a huge move. So, in any event, this is showing you how strong it is. We tighten up, hardly touch its 10-week line, take back off again. And we can see here, we do that typical tight action. And this is where, as is typical of so many leaders, you get this huge move. Yes, sure, you get some shaking around its 10-week line, but nothing that's going to knock you out of the stock in general. But this is your big change in character where the emotion comes in, the tightness disappears. You're going to get kicked out of the stock there. This is a very hard one to. There was really no clue ahead of time. If anything, I know myself, if I was looking at this setup prior to this week, I would be thinking that Apple's just going to take off and do another little dance like it did here. Anyway, what it ultimately does, as we see, is we break below. But look where we get support again. Notice there's no. That's not a coincidence, right? And we start to. That's where our closes are. We start to get higher lows, higher highs. Volume comes back in here. And that's what pushes us back above what we would call resistance. As you see here, this is not your tip. This is great. I'm glad to see this. This I can tell you just by looking. There is no proper base here. However, this is a very logical, legitimate entry area, even though it's early up the right side according to the textbook. You've got risk reward in your favor, starting a position right here and, starting off, obviously, look to the left on a daily chart and start managing your risk tight and logical. And then this is one of those names. And it's not surprising, as you can see, when the market's working and it breaks out, it's going to lift and and respect. My guess is throughout this period, it's probably respecting its 10-day moving average, forget its 10-week line or 50-day moving average. And this looks like the same sort of thing going on here. You get the big breakout, maybe a little shake, but you're ultimately holding up above its short-term moving averages. Let's call, short to medium term, 10, 21 days. And again, if you just wait for Apple to force you out, and here again, maybe you even sell a little, maybe if that's your style to sell a little bit proactively, you're out. Me, I'm going to wait for my first and typically second close back under that 10-week line. But even then, if you're working your way in here early up the right side, as we normally do, and waiting till you're getting forced out, you're still almost doubling your money there without having to do anything except follow some lines on a closing basis and be disciplined enough not to, get yourself too top heavy there. And what I mean by that is the problem with getting too top heavy on a name. You'll see that what look like little market corrections in retrospect along the way aren't so little, and it's very easy to get pushed out of positions that get too big at the wrong place at the wrong time. I was actually doing a lot of thinking about this today. I always say it doesn't matter how right you are if you can't hold the stock. So it doesn't matter if you've got the right stock at the wrong time and in the wrong size. If you can't hold on, you might as well just have the wrong stock, right? So enough preaching there. That is really it. I mean, Apple was one of those, like I said, it was one of those super clean, simple technical situations that had the fundamentals there, and again, just using its key moving averages and some basic risk reward rules. It was not that difficult to take a chunk of to take a chunk of money out of the middle of either of these runs, whether no matter where you got in. This is one of those things, and again, it could start off as a day trade, and this is actually one that's so, like I like to always say, position trades can always be used as a swing trade or as a day trade. This is one of those things in that you could have started off as a day or a swing trade and turned it into a position trade just because of how strong it is now. Of course, that all goes along with being in it at the right time. That involves typically being right from the get-go and not having to spend too much time and patience sitting around. But anyway, enough said. Richard, what can you add there now that I'm done blabbing?
Sure. Yeah, no, that was fantastic. So first of all, I like O'Neill points out the really tight price action, and that was really a character of Apple throughout this run. We saw it initially right here, kind of at the bottom of this cup with handle as well, and then all the way up here, 4 weeks tight at a point as it breaks through those highs. That's easy way to get a little bit more out of the position here. I also want to mention, I should have talked about this before when it comes to fundamentals. In addition to, of course, the new products coming out with Apple, what really is special about this company is the CEO. And nowadays we've got Jeff Bezos, we've got Elon Musk, huge innovators, really changing how we work, live, and play. But back then it was all about Steve Jobs. I mean, he had amazing ideas, and I'm sure ran his company with an iron whip. I mean, he got what he wanted, and really changed how all of us interact with everything. I mean, I've got a iPhone right here with me. So yeah, not mentioning Steve Jobs would be a crime in this video. He really was the backbone that created this entire move, his innovation, his ideas. So I want to mention that as well. And Ross, what do you kind of think about this end of the run right here, where we have a big weekly move up and then a second week, which basically retraces that entire prior week? What do you think about that?
I'll tell you, it's in real time. I don't know exactly how I would look at that. Although I will tell you here, just like we have the note, we are at best at a add-on entry
Right.
area. So even if you were to start adding on now, mind you, add-ons should either be avoided or become much smaller the further you get in a stock's run. And if you've been buying this stock since back here, I mean, we're almost up 7 or 8 times here. So for starters, I'd be very cautious about adding, just like it says here. And if you were going to do it, be small. And as soon as you're wrong, that's one of those ones where once you're within 1% of the round trip, take your money and run. The risk reward's not worth it. And you can ultimately, I like to be forced out of the stock. And listen, at the end of the day, if that's not your style to try and sell part of your position, into strength here, there's nothing wrong. Like I said in the beginning, if you worked your way, again, it's much easier to work your way in early than it is to sell perfectly. I mean, selling is definitely the harder part of the game. So if you're, working your way in early, especially maybe you're pyramiding in such a way that, being forced out, waiting to be forced out is not such a big deal. You're still making yourself a solid. You're depending on how you play it, you're doubling your money more or less, give or take a few right within that period, just from here to being forced out. So I'll leave it there.
Perfect. Let's go ahead over to MarketSmith and take a look at some of the charts in there. And here we are now on a weekly chart just to show the relative strength that Apple was showing. Here is the original cup and handle breakout that we were talking about before. And then during this period, we've got an overall market decline, a consolidation, a lot of choppiness where we're forming lower highs and lower lows. And look at what Apple's doing. It's just forming bases, moving off the 10-week, obeying that key moving average, and look at the RS line here, making new highs pretty much every single day. So really basically being a basketball underwater, as Jim Ropo likes to say. And that's your really your clue to when we start seeing stocks set up and things start bottoming, to focus on those leaders, which can really explode once the overall market starts an uptrend. And the last thing that I want to mention on this weekly chart here is if you look over to the left, this obviously is the 2000 crash, and Apple, like many tech stocks, got absolutely crushed. And it takes quite a while to set up. So you really don't want to be interested in the stock until it gets back towards these resistance highs, as we see from this cup and handle setup, where the market is starting to bottom and turn up and start an uptrend. And we see a nice push up on volume off the lows, most likely a strong earnings gap up, which really changed the character with Apple. So just thought I'd leave it there. And now let's go ahead and check out the actual top in Apple right here.
All right, so here we are looking at the top of Apple's move that we were just looking at on the weekly chart. You can see here that 1 week straight up from this short consolidation that we were talking about had that climactic exhaustive look to it. You had this one huge day, exhaustion gap, then you finally, volume doesn't pick up here, but it's still way above average. You come way off all-time highs and close barely off lows and barely higher. That's clear stalling action. We ultimately hold tight, but you can see immediately here, volume starts to just pick up with this down bar. And again here, so this is where you might want to go, wow, we're really extended here. This is giving you a clearer picture. You can really see in detail. And then, like we always say, looking to the left, what averages does Apple tend to respect? Well, it's 10 and it's 21 day for starters before it's 50 day. So this is where you can, really look in detail and give yourself the most options to work your way out of the stock, assuming you are plenty profitable on it. You can start selling some stock. You can do it in thirds, a third below the 10 day, a third below the 21, and the rest once you're sure it's, kicked you out below the 50 day. However you want to play that, it gives you plenty of time to work your way out of the stock. And even if you waited for its second close below the 50 day, and you didn't get that last 10 or $12 out of, a third or 2/3 of your position, it's not the end of the world. Remember, you're getting about a double from here to here, and the stock's up almost 7 or 8 times overall. So in any event, this topping action or that exhaustive action, followed by the pickup in volume as it rolls through key moving average, is a lot easier to see on the daily than the weekly. So.
And what I'll add here is just taking a look at this base. This is the key point here where you might have worked yourself back into the stock if you got pushed out here as it broke the 50-day. We've got, it looks like, another earnings gap up on large volume. Changes the character a little bit. Kind of reminds me of DocuSign a little bit here, where we've got earnings gap up, and then the stock moves out of a longer term base. But definitely some consolidation pivots where you can work yourself back in. Nice tight action on very low volume here and here. And then here's a nice consolidation pivot with a nice breakout that ultimately takes out the standard base breakout as well. And even after you've moved up, you've got another consolidation pivot right there. Look how the volume dried up right before this move up. Really, to me, this screams accumulation. And from there, we just respect the moving averages. And even towards the end, we respect that 10-day even, showing a lot of signs of power. So yeah, that's all I'll add. And why don't we move on forward to see what ultimately happened to Apple after this basically top, and how you could protect yourself. And here we are now moving forward to just kind of see the destruction here. Definitely a change of character after this climactic type action. Loses all the key moving averages and starts a downtrend. Tries to rally back up off the 200-day here, but ultimately fails once again. And this does actually start a double bottom move, which ultimately does recover. But from this top, you're losing about 50% of your capital. And you really want to protect yourself beforehand, obeying your rules, obeying those key moving averages, and waiting just for a better spot to get back into this stock. So Ross, anything to add when it comes to Apple at this stage?
No, I think we're pretty well covered right there, my friend.
Well, with that said, let's just go on over to the current price action and talk briefly about what's going on with Apple now, basically 15 years later. And here we are now looking at the current price action. This is the current week here. Obviously, we've had a bunch of stock splits along the way. Apple has become a enormous company, and obviously has impacted all of us incredibly during these past 15 years. But it's still a pretty good stock, very high quality. We were just noting, Ross and I, before we press record here, that's got accelerating sales once again, triple digit earnings growth. This is really impressive from such a large company. And look at the return on equity, 74%. So this is still a juggernaut. This is an incredible company. And their earnings growth is not too bad for this year. And we don't have much growth expected, but the earnings estimates are increasing. And as for the chart, and also Ross, if you could open up the fund sponsorship just quickly here. As for chart, it's moved up out of a longer term base here. We had a nice buy point around here. And look at the fund ownership, nice increasing trend, and a bunch of high quality funds as well. So without Russ, anything to talk about when it comes to the current price action of Apple?
Nope, I think you've got it. That, right now we're working our way through another pivot point. It's a wait and see from here, but it's trying again. But other than that, no, you've got it covered head to toe, my friend.
Perfect. And obviously at this point, Apple is no longer kind of that hyper growth company that we're kind of focused on. We like those mid cap, at least smaller cap than Apple here, which have maybe a longer runway ahead of them, still introducing revolutionary products. Apple is still a fantastic company, but is out of that super fast period of growth. So with that, thanks for watching. I hope you guys enjoyed. If you did, go ahead and leave a like down below and subscribe if you haven't yet to the TraderLion channel. And I'll see you guys in future videos. Thanks.